Okay, let's talk about Redwire. It's really time to sit and finally understand why this stock is making a ton of money for many investors. I personally have received a multitude of questions on X by messages of many users and many people asking me what do I think about the stock, what is the future outlook, what the strategy looks like, if it's well positioned in the space economy, and if the stock obviously has a future. Those are all fair and valid questions, and to be honest with you, I don't think one single answer can respond to all of them, so I thought it useful to create a series. And the video that you're watching right now is the first of a series of 4 videos about Redwire. I mean, there are very few resources circulating out there about Redwire. There are very interesting content creators. One of them is Space Investor, which I highly recommend to follow because offer very rich content. On the other hand, I also saw many people being a little bit lost in the technicalities, so I really wanted to offer very simple, digestible content, direct, straight to the point. And I wanted to say why I do believe that Redwire will make a ton of money in the future. Therefore, this series will be structured in 4 main episodes. This is the first one. And the first one in particular will be focused on why the numbers are really starting to convince me, and most importantly, smart money, the big, large investors. But before starting, I really would like to thank all the community of X for the insightful content, for the interaction, the conversation, even for those who disagreed with me before the Q1 report. If you might remember, I announced and I recommended everyone to buy before Q1 report. I'm extremely thankful and grateful for the level and the richness of the conversation that brought argumentations, ideas, data, and many interesting factors. So I'm really happy that our community is quickly growing. Now, let's talk about Redwire. As you know, Redwire Corporation is a space and defense tech company. It provides components, systems, and services for critical space and defense missions. And the company has been growing through a strategy of acquisition. So if you want, has been mainly inorganic type of growth so far. And this M&A strategy has been culminating in 2025 with the acquisition of Hedge Autonomy, which added also the defense sector or the defense line of business within Redwire Corporation. For this reason, today Redwire is not just a space company or a defense company, but is actually both, and it's branded and organized as such. It's also quite a large firm because it's based both in the US and in Europe and employs over about 1,000 to 1,300 people all around the world. But in this video, I would like to take a look at the numbers and provide you with a high-level overview of why I believe those numbers are convincing, or at least they convince me within the broader narrative of what Redwire has to offer to the future and to the shareholders. The first metric that I look at is obviously revenue, and revenue represents a conversion of projects, intentions into an actionable result. That means essentially how many bills have been issued, and that provides an overall idea about what the company is doing, but that doesn't give much more of that. But let's start with that, because if we see that the revenue makes sense, obviously we can engage in a conversation. You can find here the revenue of Redwire from 2020 to 2026. We can see that revenue has been steadily and monstruously growing from 2020, where revenue was just a tiny 44 million. Obviously, since then, after the IPO, many things have changed. In particular, on September 3rd, Redwire 2021 went public through a SPAC merger with Genesis Park Acquisition Corporation. Its revenue spiked up over 210% from previous year, and since then he has been steadily growing around 30% year over year. Now, a company that grows at this pace deserves some attention. Like I said, is not enough. It's not the full story. It's probably just the 10% of the story, but is enough to start engaging. It's enough to start the conversation. Now, the numbers that really matter to me and to many investors, whether retail or institutional, are different. So we are looking at EBITDA and gross margin. Those are two of the most important metrics, and two of the most important metrics that showed how Redwire is changing narrative in Q1. Now, if you're wondering why the price of Redwire spiked up right after the investor call, despite a minus 10% right after the report, the reason is in those two numbers, in particular to the gross margin. A little bit less on the EBITDA, to be fair with you, but the gross margin really showed the change of narrative that was required by large investors, smart money, to invest large amount of capital in Redwire and drive the price up, just like we're seeing right now. Now, I want to know if the company makes money, if it's good in making money, and if it does this recurrently, structurally, and in an extremely sustainable way. EBITDA and gross margin provide exactly that information. EBITDA provides an overall profitability of the company. This includes, for example, production costs, but also R&D, marketing, and other overhead costs. So it's an overall expenditure as opposed to the gross margin, which is more a measure of how effective pricing and production processes are efficient. So essentially, we are saying that the gross margin does not include, for example, R&D and marketing type of expenses, all expenses that have been historically heavy for Redwire. This is the reason why gross margin has always been positive, or I would say has been the outlook has been quite positive, especially in Q1 2026. It's been improving at least, as opposed to the EBITDA, where there were some concerns. There still are some concerns, as we will see, but that is mainly driven by R&D. Now, let's look at the numbers. Let's start with the gross margin. The gross margin, which, like I said, excludes all operating expenses, has been showing different stories here. So from 2021 to 2026, has been interestingly high in 2023. In particular, from 2021 to 2022, margins remained relatively healthy as Redwire focused on higher margin-based infrastructure and engineering activities. 2023 marked a peak operational efficiency, like I said. 2024 margin compression reflected rapid expansion costs. If you remember, there was manufacturing scaling, acquisition integration, and lower margin contract mix. There was also a problem with estimate to completion, so several problems with ETC, problems that will be dragged all the way to 2025, as we saw. 2025 in particular was the year of deterioration from the financial point of view, because it was driven by hedge autonomy integration cost, EAC adjustments, and operational inefficiencies, as much as, of course, aggressive scaling investments. Now, 2025, I like to call it the year of building silently, head down, where the results would have been showcased in 2026. And this is exactly what's happening right now. Redwire will start showing numbers that make sense now. At the time, some people were skeptical. At the time, 2025, 2024, might have been scared by the financial settings and the fundamentals of the company, but now everything will start making sense. And the best part, like I said in the other video, is that there will be no AEI capping the price around 10 or 12, because they already exited, and the price will have no psychological cap around that number and will keep growing all the way to the historical 20s, hopefully, God willing. The most important message, of course, from Q1 was that the company showed that the narrative is different. So in Q4 2025, investors looked, wow, you have a great revenue. Wow, you have a great backlog. Fantastic, your demand is great. You're really rocking. You're really capturing the attention. But your profitability could be better and must be better. Otherwise, I will stop investing in your company. Now, Q1 smashed exactly that type of expectations and won the hearts of the smart money, because it showed that they can do money, shifting from a 9% of gross margin to 26%. This is a huge improvement, and this is just the beginning. And the shift from the strategic point of view is from a low margin R&D approach to a high margin production posture. This is what changes in the narrative of Redwire, if we could summarize in one single sentence. Now, I don't know about you, but those numbers truly convince me. I'm talking about the revenue and the gross margin. That's still not all. Let's move to the EBITDA. The EBITDA is earnings before interest, taxation, amortization, and depreciation. And this is also another important measure of profitability, overall profitability of the company. This is where some pains maybe might be highlighted, because it's where R&D expenditure is extremely high. Acquisitions also have been extremely high, but R&D in particular has been particularly high in the previous years, because there was a business model for Redwire where R&D was based on demand. So based on the requirements of clients, mainly governmental entities, NASA or US defense agencies, that required specific, I would say, criteria that required themselves a lot of earning cash through R&D and expenditure. Therefore, this approach has been changed. Now there are specific products and lines for Redwire, and there is an extremely profitable, high margin production process and line that ensures a continuous flow of capital and revenues. And that's exactly what we want when we look at the EBITDA. Now, if you look at the chart right now, we can see that the EBITDA has been quite negative for most of the years. Because we have seen in 2021, 2022, 2024, 2025, always negative values except for 2023 with $14 million in EBITDA. What really changes, again, like the edge autonomy acquisition and the high expenditure, high capital burning on R&D has driven the cost down in 2025, the historical maximum. However, is expected for 2026 a positive EBITDA. Now, this is exactly where a lot of focus of investors will be. If we ensure, or Redwire team will ensure, that the gross margin will still be positive and steadily growing, just like the demand and just like the revenue, then the next focus is going to be mainly centered on EBITDA. Now, EBITDA must turn positive in the next quarter, and what I suspect and expect is that that will be the case, because I think punishment will be extremely harsh from the smart money, from the retail investors, if that number will not turn positive or will not show positive improvements. In fact, for 2026, EBITDA is expected to reach $47.5 million. This is the expectation of analysts, possibly also agreed with Redwire, and I think it's pretty fair and would be a great signal. I'm sure this will drive a lot of the price up. But of course, another area of improvement is the EPS. EPS is a pain point for many high growth, high tech companies. I think it's the same for many space companies out there. And it's usually driven by the fact that there are low earnings or low margins, and there is a lot of expenditure on R&D, and most importantly, the revenue is growing, but also costs are, I would say, exponentially growing. Now, the EPS itself must improve. Does not mean that we are justifying any single negative outlier and any negative, I would say, divergence from the targets. Obviously, no, we would be extremely concerned to see this continuously. However, if you look at the numbers right here, you can see how from 2021 to 2025, the EPS has been becoming more and more and more negative. That became particularly concerning in 2025. The EPS represents the earnings per share. So in 2025, culminated with a minus $3.11 per share in loss. That is not particularly nice. However, what we expect for this year, investors and analysts at Wall Street expect for this year a minus 0.40% dollars per share in loss, which is a huge improvement, would be a huge improvement, and this would extremely would represent something extremely reassuring for investors. Personally, if you have to ask me, I will feel 100% comfortable when I will see the number turning positive. So as long as it does not turn positive, I will still be a little bit anxious, although positive and optimistic and absolutely trusting the company and the management. However, I will still feel a little bit of anxiety around it. But it's also true that if you invest right now in a company where the numbers are not perfectly shining and there is a huge potential, but the numbers are still a little bit concerning, well, that's how you make a lot of money, because you need to invest where the numbers are not shiny to get that bargain, so that when the numbers will actually become shiny, your capital will be multiplied by X times. This is how you make the real big money. Also, because when EPS will turn finally positive for Redwire, God willing, it will be maybe too late to invest, because by then the price of the stock will be already skyrocketing. Another important metric that I also look at is the debt. Now, to achieve break-even faster, increase profitability, and drive the, I would say, investors' confidence, that must also be cut down, must also be reduced. Now, look at the numbers here. We can see now in Q1 report, investors updates with Redwire leadership, the call with Paul Canito, delivered the interesting news about the financial initiatives taken to reduce the burden. Hopefully, we will see the debt near to zero by 2026 or early 2027, God willing. But it's obviously important for the financial health of the company. Now, let me add also a point here with regards to the dilution. I think this was the main point of this quarter with the X community. I would like to say here that the recent sales of $350 million was not unexpected, was already announced before, also like Space Investor mentioned before. It's something that helps the company to raise funds. Now, when you need funds to expand your ventures, to expand your lines of service, to provide a better product, better service, better credibility, better marketing strategies, you have two options. Either you raise funds from private capital or you raise funds through banks, for example. Now, if you do it through banks, you need to pay a lot of interest. Banks charge criminal interests. If you onboard the new investors, new board directors, new shareholders, actual people or decision makers, decision making gets diluted, and this is extremely critical for space companies. You cannot allow too many people deciding on one critical issue. You need one direction, one vision. Therefore, for the sake of governance, the best option left would have been the sales of shares, dilution. Now, why I believe this will not be extremely impactful? For many reasons. First of all, there is a lot of growing attention on Redwire, and the most important reason, this is what I personally believe, is that there are many upcoming upward catalysts. Those catalysts include, for example, the new Q2, Q3, Q4, which I expect to be necessary to be positive, because if they're not, the company will be punished. I also expect the end of the war in the Middle East. I expect positive numbers from the Fed, hopefully. And possibly I see a turning point when it comes to industry and manufacturing, where AI and robotics will merge together. An incredible amount of demand will come, and many new contracts will be signed by Redwire and similarly to Rocket Lab. We'll discuss this in separate videos, guys. But what I want to say is that I'm extremely hopeful that numbers will look good, and so dilution will not have an impact as many. So this is it for the first video, guys. I hope I did not miss much, but what is important here is to convey the message of Redwire, and this is the reason why those numbers convince me, convince many, and the price and the market are never wrong. So the price has been up because many investors believed in the narrative, believed in the numbers, and are hopeful regarding the future of Redwire. If the price will drop down because of Redwire itself and not because of macro, let's say because of inflation or job reports or because geopolitical tensions, well, in that case, we should be concerned. But this hasn't been the case yet. Please let me know in the comments below, what do you think about? If you have any feedback, if you agree, if you disagree, I'm extremely happy to debate and to exchange ideas. This is actually something that I obviously welcome, because I like so much the power of the network. Disagreeing is also something that produces a lot of ideas, a lot of interesting comments and strategies. I learned a lot through disagreement. I made the best investment decisions through disagreement when I was wrong and someone pointed that out. And so I'm extremely grateful for any form of, I would say, respectful disagreement, as long as the intellectual level is very high. Once again, thank you so much for watching this video, and see you in the episode number 2. And let's go Redwire.